Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 22nd of March, 2017, about 1:50 p.m. Central Daylight Time. Just did an interview with the Wall Street Journal. Obviously, the question was the metals. They were centering on the copper, and what I pointed out to them is if you took a look and you looked at the 100-day moving average in copper, that often when it hits is a first support zone. It's exactly what occurred today, and the market got a bounce. Not a change of trend. It could be an area where traders wanted to cover. They asked me why, and I said because you have a huge vote taking place tomorrow in the House, and the question is the dismantling of Obamacare. But more important, it's the political currency of President Trump. That's what we're going to be looking at. If the vote goes through, and I'm not saying it will, they may not even vote. You know, if the Republicans think that they need more time to put more votes together, fine. They don't want to go headlong into a loss. But if they lose, what does that mean for other markets? You got to ask yourself, what does it do for the tax bill? What does it do for the other bills that he wants to pass, be it his budget? Everything else down the road starts being questioned. Does he have the political currency to get anything done? Let's turn it around. He gets the bill through. Well, he's known as the negotiator. So back from the dead, he wasn't going to get anything done. And here he's attacked the Obamacare. Whether he gets the Senate on board or not, he's showing his political currency. I think tomorrow's a big event. I think it's as big as a Fed announcement. So trade it accordingly. You know, I'm not going to tell you what to do. I'm just telling you that that's what I told the Journal. I think that you're seeing the bid in the gold because of that. Nobody knows what to do in the other metals. The dollar's down, but I happen to come up with the school of thought that that's part of the Trump plan. Keep the dollar a bit lower at the expense of other currencies. But let's go to the gold chart and see what's going on. We had a successful test on the weekly chart the past 2 weeks of the combination of the 100-day average in green and in red, the 18-day average of closes. Traders look at moving averages. Now, you may not agree with my 100 or my 18-week, and these are weekly moving averages because we're looking at a weekly chart, but they look at averages. The 100-day, very popular. Sometimes the 200-day, week. I keep saying day. 200-week, very popular. So on weekly charts, it's that way, and those same numbers on daily charts. When I look at a daily area chart of just closes, and it's called an area chart because it looks this way. You've gone from a recent low of 1,200 up to today's close of 1252.80. Remember, we get the settlement price at 12:30 Central Daylight Time, even though the market trades till 4 p.m. Central Daylight Time. When I look at this chart, I don't know what I've got here. Let me explain this. You were here before. At the end of February, you fell, you're coming up to it. I can make an argument that you went back into support after a nice rally, but you haven't gone anywhere new. How's that? Yes, you recovered, but you haven't gone anywhere new. Very important argument. When I look at the market with the swing line on it, at least I have more info than just looking at this chart. Because what this does is this tells me I've got a pattern of each of where these arrows are. I've got higher lows and certainly higher highs. That's bullish. The market is trading over the 18-day average, and it's fought a battle at it for 3 out of the past, 3 out of 4 days, and it broke away from it. That's bullish. Where's the resistance in this chart? One of the resistance points is the upper Bollinger Band at 1268.10. Why? The odds of a market staying above or below a Bollinger Band, which is an algorithm designed to keep the market trading within it 95% of the time, it offers theoretical support numbers, theoretical resistance numbers. Got it? That's the way that I teach it. and I try to have traders employ it. Now, with Bollinger Bands, I often use what's called slow stochastics, because if they do things like embed, it's not uncommon that they try to push the bands out. And what they did in this case is when you had the embedded reading, and this is what embedded looks like. It's when both the red and the blue go sideways over 80 for several days or more. But when you lose that reading, it is not uncommon for price to first go to the 18-day average, and then if it falls hard, it might travel to the lower Bollinger Band. And that's exactly what occurred. And the market fought a battle at the 100-day average in that, then at the 18-day, and now it's trying to say, well, it's ready to move out. However, it's overbought as can be. Danger Zone, Will Rogers, or what is that one from, God, Lost in Space? I forgot what the kid's name was. As you look at this on the GLD, higher lows, higher highs, overbought. Same chart picture. Maybe you make it to 120.22. Will a passage tomorrow for Mr. Trump in his favor, he wins the vote, be good or bad gold? I'll let you decide that, okay? But that's what you're faced with looking at. What about failure? He doesn't get anything through. Is that good or is that bullish or bearish gold? Again, you're going to have to decide that. The gold miner's acting good. Higher lows, higher highs. I'm not looking for much more than 23.72, the upper Bollinger Band, before resistance is hit, because you're overbought as can be. When I look at June gold versus May silver, I'm going to call it a ratio. And my concept is this. It may not agree with what everybody does out there. I want to know how many ounces of silver it takes to buy an ounce of gold. And I also want to know, is that trending up or down? And in this case, you need more and more ounces of silver to buy an ounce of gold. That means silver is not as bullish as gold. That tells me a story. It may go through the rest of industry. But silver is not a precious metal. It's a semi-precious at best. Industrial, some would say, even more so. And look at where you're at. Instead of getting up to an upper Bollinger Band, you're having a heck of a time just staying over the 18-day average of closes, but you are over it today. So this market is bullish until you take out 1734. Got it? Turn the corner. What about the silver ETF? Well, it's not closed yet in terms of a settlement price, but you're at 1663, which is over 1660. Same pattern, higher lows, higher highs, over the 18-day average. Bullish again. Copper market. This is what I told the Wall Street Journal today. I said the first challenge of the 100-day. And if you go back on this chart, which on this one I'd have to lift it up, but believe me, I think it goes all the way October, November before you were back down there again. So you've fallen back, but you've also seen this average go higher. So it's not all that bad of action. The market is not at $2 any longer. It's $2.60 roughly, $2.64 to be specific. You rallied from this 100-day average today, by the way, with this price almost 5 cents. It's a heck of a bounce. But that's where I think the pros covered their shorts, and I think they want to see how tomorrow's vote goes in the House. In looking at the platinum, it's stuck between the 18-day and the 100-day average, just going back and forth day after day, looking to see what to do. Is there a trend here? Not really. The swing line's bullish. You got higher lows, higher highs, but you can't close over the 18-day average, so the bias is down. The two fight each other. You got nothing. You could say that slow stochastics is momentum, which leads price action, and it has done its job. It's carried the market back up, but it seems to be stuck. In the palladium market, this has been much stronger. It's been in an upward trend since back here, and it's just carried itself higher. Not bad action. Up to the upper Bollinger Band, overbought. I think the pros are coming out up here. In the dollar index, this is super bearish. It just keeps riding the lower Bollinger Band. You get just enough of a day where you close over it, then you can afford a couple of days under it. Nothing friendly here. And anyone that keeps telling you in the press, the dollar bull trend. I had one of our writers, and I understand his perspective. He was one of my viewers saying, well, you know, Ira, if you look at a 2.5-year chart. Guys, we're not trading 2.5-year charts. We're trading daily charts. Let's understand that. Number two, why not go back 6 years? I'm looking at the current trend. Currently, you were up near 104. You're back down to 99.46. How could you say this market's in an uptrend? It's in a downtrend. The question is how severe. So you put it together, you try to come up with ideas. Now, there's one thing you know for sure. Who are the biggest bulls in the world once they get their way? Gold traders. You know that. Well, Consensus is an interesting publication. You're going to get a 4-week trial if you want it. You're going to get a user ID and password, and you can read online all these newsletters. And I'm not talking there's 20, 30. I'm talking, look at all the contributors. You probably got 100 different contributors to all this. One after the other. This is one page of them. Then you're going to get others. What are they trying to do? They're trying to show you their knowledge. What are they doing? What are they telling their clients? Because if they're writing here, their clientele are getting it. Then Consensus takes all those, categorizes them, which ones are bullish, which ones are neutral, which ones are bearish. And you get what's called their bullish consensus. That's worth a lot. So how do you get involved in all this? Well, all you need to do is give us a call. You're going to get a 4-week free trial. Call us at 866-973-2077. You can go to our website at www.iraepstein.com. You'll see a carousel of free offers. They're one of them. You can click right up here. You'll see the I, and that means that you're seeing this as a YouTube video. Click that. The form will appear from there, and you can just fill out the form for this or other offers you want. And that same form will appear on the bottom if you want to click it. So all the information you need. Here's something free to take a look at, and something I look at, and I know other traders all the time. You have a great day. I'm Ira Epstein. I'll see you all this afternoon in our end of the day wrap up in the financial markets.